Hey everybody, it's Wednesday the 16th of August, and the market did finish with another loss here today. Kind of chopped around early this morning, and then this afternoon we sold off right to the lows there. We're continue to be below that declining 5-day moving average, which has kept us from buying this whole pullback, while other people are trying to buy the dip, trying to buy the a pullback to the 20-day moving average, the 50-day moving average, pullback to VWAPs, etc. It just doesn't make sense until we start to see some accumulation. These are levels of interest. We've dropped down to our next level that we wanted to see tested, and we are testing it here. There's nothing saying that will become support. It's funny to see, sometimes people will say, it hits it there and then bounces a dollar, and they'll say, hey, it bounced perfectly off that VWAP. You've got to give it more chance than that to give it the opportunity for buyers to really say whether they're going to step in and hold the market up or not. We want to see something like this for a turn. We have zero evidence that's going to happen. We're below the week to date anchored volume weighted average price. That's the blue. And we're below all these levels that, again, we've got the 20-day moving average, which is declining and will continue to decline for the foreseeable future. In the next, 6, 7 days, we're going to get rid of this data. We'd have to be way up here for that 20-day moving average to be rising again. That's so far away, it just isn't realistic. The 50-day moving average is right here, and by this time next week, we'll be getting rid of this data. So, we've got to just continue to be very cautious, and now we've got to look at it and say, okay, is this level going to hold, or do we have to put an anchor VWAP there and see if maybe that's our next level of interest? There's nothing to suggest this will hold as support. In fact, I wrote about in my book that we don't buy the touch, we buy strength away from, based on a shorter time frame, giving us an indication the buyers are stepping up, and we have zero evidence. So remain defensive towards this market. In the S&P and in the Nasdaq, our next level of interest here is this anchored VWAP that would bring us down just a little bit further to maybe about, what is this, about 360 right there. And then below that at 356. And again, there's nothing to say that any of these levels have to hold. With a declining 20-day moving average, it just makes the odds that a bounce will just be that, and a bounce, not a turnaround, because we're going to have to do some further repair of all this damage that's been done. The 5-day moving average is declining. It's guilty until proven innocent. If you're going to trade the long side, it should be for just day trades only. And we're getting into these areas where if we continue much further, it doesn't make a lot of sense to be looking at initiating new shorts. Of course, on the intraday time frame, it makes all the sense in the world. If you look at a 2-minute time frame here today, when we see these rallies, what we want to do is we don't want to short these rallies. Instead, we want to put a volume weighted average price on that prior low. So once it starts to rally and we recognize that's a low, then we set an anchor to this low, for instance, and then we would be looking to sell short here with a stop above there. If we were going to sell short, this pullback, or I'm sorry, after this rally, we would sell short as it's breaking down with a stop above there. If we were going to look at this bounce, well, we don't want to short it until this point over here. And at that point, it would have been too late because it had dropped too much. So not every one of those is going to give an opportunity for a short sale. And it's not the point that they should. The point is you want to wait for a level of interest to be confirmed on a shorter term time frame, and then start to look for the opportunities, the low risk opportunities to short. And again, just you can't make a clearer pattern here on this 30-minute time frame on the right. It is just still a pattern of lower highs and lower lows with a declining 5-day moving average, a declining 10 and 20-day moving average. We don't see the 10, but that's clearly declining as well. What we could do is take a look at this 130-minute time frame, and here I've got a 5, 10, and 20-day moving average. 5 below the 10, below the 20, they're all declining. That's just not a bullish scenario here. So people who are buying are, again, they're getting exactly what they deserve. We were looking at the Russell 2000 saying there's a lot of reasons to think that 188 has the potential to become support. We spoke about the volume weighted average price anchored to this gap. That was right there, the rising 50-day moving average, this prior resistance. Let's just redraw them all in, those reasons right over here. Let me do this so we can clear that up. And again, what we were looking at was one, the anchored volume weighted average price from the beginning of this move, the rising 50-day moving average, that's that blue, and then this prior resistance. And we said there's a lot of reasons to think this might become support, but until we see actual evidence, there's no point just buying blindly at that level, at that 188.5 level. If you bought at 180 and 8.5, you got what I think you deserved, which is to lose your money for not waiting for the actual evidence of the buyers to be there. Declining 5-day moving average, again, I've said it, thousands of times, has saved me more money than any other indicator I've ever used in the market. If the 5-day moving average is declining, it just doesn't make sense to be a buyer for more than a day trade. You can look at your day trades again on shorter term time frames and maybe look to be a buyer, but even there, the odds just aren't good. The semiconductors continue to bleed off here a little bit, looking like they're maybe going to test the lows from Monday, and that occurred just near the anchored volume weighted average price from that April low. And again, there's nothing to assure that that will hold. But what I'd really like to see is for it to kind of undercut that and then maybe come back and turn around at least up to to for a trade perhaps into this area where the 20 and the 50-day moving average will be found. But by that point, it'll take a few days and we'll be getting rid of this data in the 50-day calculation. That means the 50-day moving average is likely to roll over. So there's just a lot of reasons to continue to be cautious. And if you're trading the long side for, even over in here, if it gets back above that 5-day moving average, I wouldn't be too aggressive, not with it below the anchored VWAP from that peak, below a declining 20, and the 50-day moving average will be declining as well. So just not a lot of reasons. I realize I'm repeating myself, and I'm doing that intentionally because all of these markets are sending the same exact message, which is it just doesn't make sense to be a buyer. The biotechs continue their breakdown. That's not a surprise. As long as they're stuck below this prior band of support at 81, 81 and a half, they're guilty till proven innocent. Only a fool, in my mind, would be a buyer in here of a market that's declining. Same is true with the financials. Yes, they're down to the 200-day moving average. They're down to the 50-day moving average, but there's no evidence that the buyers are gaining control. So there's no point in buying those. And energy names, they're in pullback mode below a declining 5-day moving average. There's no reason to be a buyer there.